What is up, you guys? Today I'm going to teach you one of my favorite setups when it comes to trading, and it's going to be on meta. That is the descending wedge with a very solid Fibonacci retracement golden zone support. We're going to talk about why this is such a good level. We're going to talk about the big gap up from earnings, why that is important as well, and exactly how to trade this. So if you're somebody who is tired of just not getting consistent profits or consistent returns in the market, trading like this and learning this specific system and setup will definitely help you out. When I started trading, this was like the #1 go-to, not for me to make money all the time, but to consistently profit long term. So let's take a look. The descending wedge is usually like a 60 to 70% chance of profit from what I've seen in my years. Like I say a lot on this channel and our other channel, we're not here looking for a high percentage return as far as our profits. Like, we're looking for a high percentage return in our actual profit, I should say, but not like in high accuracy. So we're not really caring to win 80, 90% of the time. What we're more so just looking for is good risk versus reward strategies and then executing that to the highest regard. If we take a look at meta, you can see that we had this big gap up here on February 1st from earnings. The stock rallied all the way up to highs of 197, and we were unable to hold them. You can see this big break of volume came through on the volume profile, which acted as a resistance level. From there, we did pull back pretty sizably to around $167. If we were to take our Fibonacci retracement tool and draw it from our swing low right before earnings all the way up to the swing high from earnings of around 196, you would note that our 50% fib level would be trading right here at about 172. Now, our golden level, or the golden fib level, would be right here between 172 and 166, which is one of my favorite times to enter something like a breakout off of earnings with a huge gap. We have this push up, a recovery, and your time to enter is usually between the golden fib, the strongest being down at 166, and obviously starting a position of 172 is not a bad move either. What I tend to do is I will enter in threes, so I'll start here at the 0.5, I'll enter a little more between it, and then I'll enter again at the 0.618 with setting a stop loss underneath the 0.618. So let's take a look at actually how we would break down a position here. We're gonna go through, and right now we're trading at 169.89. I think that entering here is a really, really good place to enter. It's obviously not going to be your best entry, but then again, when are you ever going to get your best entry consistently over decades and decades? That's why I don't look for the best entry. So what I would probably do is enter with half of a position right now. The thing I need you guys to understand is this is something that's going to take a while. This is a daily chart. We're looking at nearly a month of data right here. So this breakout will probably last about a month or so. If you're planning on grabbing calls, don't go with 1 month out calls. At least add 1 month to what you think the trade will take. So if we're expecting the trade to take 1 month, let's go another month. And let's go at the money. Don't do this dumb shit where you go buying calls that are super far out of the money or too close in time just because you don't have the capital to trade it appropriately. You'd be much better off just trading a different strategy using things like spreads and stuff that we talk a lot within our videos about. So don't feel that you have to force a trade or take a specific trade just because you don't have enough money to take the right one. But if we were to enter right here around this 170 level, take profit would be between 190 and 197. I'm going to say 197. Actually, because I'm usually a pretty conservative person, let's just say 191. So if we enter here, take profit at 191, our stop level really should be somewhere around 164. Now, I wouldn't run it that tightly. What I would probably do is run it somewhere around here. The reason for it is I see all of the time, guys. Big money knows where your stops are. So market makers can see it, then everybody else can see it. So what you can see here is this is our major support at like 166. I would bet you that people have stop losses triggered all underneath of here. And so what tends to happen is market makers will see that, they will dive the stock through, trigger all the stops, stop everybody out, and then guess what they do? After that, it completely recovers and then bounces back up. So that's why I would run a much wider stop loss than you're currently would be used to. But as of right now, this is looking really good, guys. I hope this video helped. What we really want to see is a break over 172, solid volume, but I think that overall this could be a trade that could bring huge returns in the next couple of weeks and months, at least 12% potentially if we can get up to that 191 level. Thanks for all the support, guys. Hit the like button, subscribe, check out our Discord community, and I'll see you tomorrow. Peace.